This is something that I think you could all write down in your journals, because I've seen this now 2 or 3 times in a row here. Something suspicious is going on here, where the inflation number comes out, it's uglier than ugly, which means, inflation, right? The purchasing power of the currency is falling, and yet the gold market actually sells off initially on that headline number. And then it sort of firms up, then starts going sideways as, the North Americans wake up, get ready for their trading day, and they're like, oh, that's an ugly inflation number. I should go and buy some gold. And then all of a sudden, mysteriously, up goes the gold market through the day. And the good part about it is you can see what I did today. It was a pretty good day. So, process goals. Woohoo! Brian's kicking butt. He's actually following the process. It's a miracle. And really, all of you guys, this is exactly what I want from all of you. Is I just want you to learn how to follow the process. What the actual setups is that you trade. I mean, you could have looked at this and said, well, I like reload zone, so I'm going to actually buy against this candle body low, that little reversal down in there. It said, well, I'm going to buy the first W that comes on the break of a trend line. Okay, well, there's LJ setups and all that. Maybe you're a bot trader. You're going to just trade specific levels. Point here is this is, of course, the setup that I teach in the, the person who asked, if they're watching this video, a person who asked, what are the setups you want to learn us to learn coming out of level 1? I want you to learn one trading range setup, the L Tangonator, and then one trend continuation trade setup. And this is a perfect example of the trend continuation setup. Bullish market structure, markets pointing up, consolidation, then this often acts as a midpoint of the move, and then the trade itself is taking advantage of that second part of this move. And really, ultimately, you could make the argument on the market structure bottom here. The market wanted to go up here, but it can't move in a straight line. It's got to rally. The public has to be encouraged to come in and buy the rallies. Institutions sell it to them. So then the institutions have a whole bunch of cash. They want to be in the market, but they know the market's overbought. So like I said, they give it to the public. Then they let the internal indicators, rubber band theory, all that kind of stuff, sort of the overboughtness of the market resolves itself through this consolidation window. They come back in on new bullish market structure. Ironically enough, the public might even be balking and walking away from the trade because they maybe they got a margin call like right here because they bought here and they brought the market down, whatever. Institutional fingerprints. Of course, we can talk about where the big boys actually put the lows in here. Did they buy the market structure or did they put in these bottoms? It's here and there. Point here is that through the consolidation, money shifts back into the strong hands position. Well, up we go and do the same thing. Whenever I see an inflation proxy like gold dump on a really bad inflation number, that doesn't make any sense. What the is going on there? And then it violently reversed higher. Interesting. Look at this silver chart, eh? Look at that. That's actually not a bad looking W, eh? It's interesting how the oil market wants to W, but it just can't quite get going. But that silver market, gee whiz, that looks good. It's quite surprised to see that out of the silver. So really what we should be asking here is, what does the gold-silver ratio look like, and what does that tell us about the economy? So if gold is outperforming silver, which is the case here, is that bullish or bearish of the economy? Usually it's bearish. People would rather put their money into gold if they're going to buy any metals, and gold is sort of bury your head in the ground, bury your gold in the backyard, and the sky's falling. Silver is used in industrial, manufacturing of products. So as a result, if silver is outperforming gold, then it means that maybe the economy is doing okay. So we were clearly in, oh my God, the sky's falling, the economy is breaking apart. And frankly speaking, I have to agree. I think to all intents and purposes, that is correct. Again, I love market-based proxies. So this kind of proxy here, love this, because this to me is it's not the government talking, it's the market talking. And you can basically see as of, I guess, about March of 2021, March, April, May 2021. That was a year after. Shouldn't we debate mortgaging our future? Shut the fuck up, right? So it was a year after. That was back here. And, through that free money orgy, well, you can see how silver acted. Right? The market got a whole bunch of free money, government bailouts, the whole thing, and the economy boomed. Unfortunately, of course, that was a big part of the inflation push here. So the economy took off because credit was so cheap. Problem was there's no goods. So what ended up happening? A whole bunch of people had free, cheap money, and they all chased after each other, bidding prices up, creating the inflation that we're in now.